Let's start with talking about something that we've heard a lot lately when it comes to the stock market. That is the word correction. And however you slice it, it never really sounds good. But I have to wonder, what is a correction? Are we in one? And is there anything positive that we can do, in the meantime when it comes to our retirement portfolio? And also, how long do these corrections typically last?
Well, I mean, if you think about the last couple of months, I mean, from July to the end of October, the market did really start to have kind of a big pullback, and we saw kind of a pullback across the board in all the markets. And so when we look at it, technically in terms of a correction, we have that. I recently had some folks that had come in. They came out to one of our recent events. And Steve and Linda, if you are looking at their situation, one of the things that they came in was to take advantage of get a second opinion. And looking at the portfolio, they were concerned because they had about a $65,000 drop in their portfolio recently, and were worried because they had saw what was happening into the stock market. To me, I think one of the big takeaways here about market corrections is, like in Steve and Linda's situation, they did not have what is called an investment policy statement in place, meaning that there was not really a discussion about what could and will happen if and when the stock market goes down. Because, whether it's in stock market portfolio with our firm, another firm, at any given point within money in the stock market, there's going to be times that the market goes up and down. But I think it's important to have that investment policy statement, to have those clear communications so you know what's going to happen 95% of the time. You know what the strategies are when things that are the other 5% of the time, like when COVID happened or 9/11 or, major market downturns. So to me, if you are looking at your portfolio and you've been worried about the last couple of months with the market downturn and you don't have an investment policy statement, you don't know what the normal drawdowns are in the market, and or if the market has a major sell-off furthermore than this correction, how much your portfolio is at risk. I think that's one of the things that our office can help you with. We can take your information, we can put it into our software and provide you a specific printout that'll show you 95% of the time during normal market conditions, this is what the experience could look like based upon the way that your portfolio is allocated. And then if it's not allocated and you don't feel comfortable with the amount of level of risk, now's the time to take a look at maybe reallocating the portfolio. So far in the month of November here, the market's bounced back pretty strong here recently. So, markets are a normal part of having corrections. They go up and down, wouldn't you say?
Yeah, I would agree with that. They go hand in hand. They're married, right? And so a correction of 10%, I think, as we're preparing for the show today, is not uncommon. I mean, 50% of the time, the market's going to go down 10% or more in any given year. And so I think the big thing to take away, Nolan, is that corrections are temporary. So and we've had a lot of phone calls, and to be honest, we've had some clients reaching, not clients, but prospective clients really reaching out to wonder if this is a normal market, if we're in a correction. And my response has been, well, again, what does that investment policy say, and what are the odds that you would go down more than 10 or 15%? And so you're right. That investment policy statement is the document that kind of just spells out what our hopes and our opportunities are, and some of the threats when it comes to your investment portfolio. Because there are a lot of times when the market is down. According to some research that we have, the S&P 500 experienced 39 corrections of more than 10% since 1950, with the average decline being about 13.7%, and it lasted about 6 months. And so, when you look at a client that maybe is down 10%, if you just looked at the averages, you might say, yeah, they're actually doing pretty good. So you definitely need to have an understanding. And to me, that's where the educational component comes into what we do, Nolan, is we have to be educators so that you know what you have, and most importantly, why you have it. We don't expect you to be investment gurus by the time you leave the office, but we at least want you to have some idea of what you own and what the potential is for that investment, because that's what's going to help you make those average rates of return a reality. Because the market doesn't go up, straight up. It goes up and it goes down, and you have to have volatility to have performance. And so it's like you're married to the volatility if you're in the market. Imagine not knowing who your spouse was, who you're going to marry. It's the same thing with the investments. You expect to be in that investment for a long period of time, so you better know who you're getting married to,
Yeah, my wife likes that show Married at First Sight, but I think when it comes to your retirement, it may not be the strategy to go with. When you're looking at marriage and you're thinking about investing as in those terms, I mean, it's like you said, good communication. It's about understanding the plan. It's about understanding that not every day is going to be sunny on Wall Street. But the flip end of the scale can be, these bad days when the market has a sell-off like it has for a couple of months. Volatility creates opportunity. I also met with another gentleman recently, and we talked about the pullback in the market. He had some money on the sidelines, and so this gave him an opportunity to be able to enter into the market after a pullback. His concern was, with what's going on right now, I probably don't feel good investing until after the election. But if we looked at it and we talked about all the reasons why not to invest, there's always a reason not to invest. There's so many reasons why that can be a costly mistake. So again, whether you're looking for opportunity or whether you're concerned about how bad things can get, our office is more than happy for you as a radio show listener, whether you're a client or not. Call us up. We'll put together an investment policy statement for you, and we'll help communicate to you how not only to survive but thrive in this type of environment and how to turn what could be a panic situation into an opportunity for you.
It's all about being able to take control of what you can, being able to maybe remove some of the emotional attachment you see when the markets fluctuate. That is what a proper plan can do for you, and you can take advantage of that offer, as Nolan said, by giving a call right now, 419-794-3030. You can also go to the website as well, arhq.com.